All right, so let's look at practical example, basic earning per share. So Alice had 1 million shares in issue on 1st January 2017. They issued 200,000 shares at market value on 1st April 2017, followed by a 1 for 5 bonus issue on 1st August 2017, with a further 300,000 issued at market value on 1st October 2017. On 1st June 2018, Alice issued additional share of 60,000, followed by a right issue of 3 for 2 at 2.5 cedis per share on 1st September 2017. The pre-issue market price per share was 4. The profit for the year ending 31st December 2017 and 2018 were 220,000 and 330,000 respectively. Calculate basic earning per share to be included in the financial statement, and calculate the basic earning per share for comparative 2018 and 2017 comparative to be included in the financial statement. All right, so that is the question that they want us to deal with. Okay, so the company name is Alice Limited. Okay, so we've already read the question, so we understand the question, right? All right, so how do we do it? So you start with what? With the period, month, period, and what? Shares, month, adjustment, then your weight. All right, so let us start. So the company had what? Outstanding shares. When was that? The company has outstanding shares 1 million shares on 1st January 2017. 1st January 2017, outstanding shares 1 million. So let us hang 3 zeros, 1 million. Okay. Did they issue another share again? Let's check. Yeah, they issued another share in what? In April 2017, 200,000. Okay. So April, new issue. So that was 1st April 27, 200,000, which is how much? 200. So we can what? We can add it. When we add, we have 1,200. Did they issue any share again? Let's check. They issued 1 for 5 bonus issue in August. Okay, 1st August. 1 for 5 bonus issue. 1st August 2017. So it is bonus issue. So bonus issue is 1 for 5. So into bracket we have what? 1/5 multiplied by the existing outstanding shares, which is 1,200. So how much do we have? So that gives you 240. Then you add it. When you add it, what do you have? I gives you 1,440. Okay. Did they issue any share? Yes, they issued another share on what? On 1st October 2017. That's 300,000. 1st October 300,000. So that gives you what? 300. Alright. Okay. So when you add it, what do you have? Give you 1,740. Okay. Now let's go. Did they issue any share again? Yes, they issued, but this time around they issued it when? 2018, right? So you have to work it out for the first year, right? You have to work out for the first year. So when you are done, before you can consider the subsequent accounting year, you understand? So you take note of that. So let us deal with 2017. When we are done, then we can come and what? Also deal for 2018 shares. Okay, so we are here. So what next? Now you have all your shares available. So what next? So how do you deal with them? So you come here. From 1st January to April is how many months? Is 3 months, right? 3. So that gives you 3/12. Another outstanding is here. From April to August, how many months? So April, May, June, July, August. August did not end, right? You see, so it's 1st August, so it's 4 months. So this one will give you what? 4 over what? Over 12. You come to from August to October. So August, September, October did not end, so it's only September. That gives you what? 2 months. So that gives you 2 over what? Over 12. Then it will come to the last one, which is from October to December 2017, which gives you how many months? October, November, December, 3 months. So when you are done, check whether when you add it, you will get 12. So you have 3, 4, that gives you how many? 7 months, 9 months, and that gives you 12 months. Now, when you look at the question, we have what we call bonus issue in there. So if you have bonus issue, you have to calculate your bonus fraction. So how do you go about it? They've given us what the bonus issue is 1 is to 5. That gives you 1 plus 5 over over 5. That gives you 6 over over 5. So this is what we are going to use for for our adjustment. All right. How do you adjust it? You adjust it to the up to the outstanding prior to prior to the bonus issue. You understand? So here you will adjust the first outstanding, which is the so that gives us 6 over over 5. Then there's another outstanding here. Then you adjust that one. That also gives us 6 over over 5. Then there's another adjustment. You will not adjust this because the adjustment affects only the outstanding prior to prior to bonus issue. So here no adjustment is going to go down. The same thing here. No adjustment. All right. So when you are done, what do you do? Then you multiply. All right, so first one, so we have 6 over 5 times 3 over 12 times 1,000. So first one, we get 300. I have 6 over 5 times 1,200. That gives you 480. That gives you 4. So when you add it, what do you plus 240, 480 plus 300. So when you add it, or what do you have? I'll get what? 1, 4, 5. All right, so this becomes your wins. So in the question they said the profit for 2016, the profit for 2017 is how much? 220,000. So that gives you 220. So the profit is what? 220. So if you are calculating for your basic earning per share, that gives you your profit over your wins. So here you have our profit to 220 over 1 4 divided by 1455. All right. So you will have our basic earning per share to 1. So this is our basic earning per share for 2017. We are done with 2017. Now let us move to 2018. So 2018, what did they say? So you come here, you have your period, you have your shares, you have your month, you have your adjustment, you have your weight. So here, what do? You have your outstanding shares. Your outstanding shares, you pick your outstanding share from the 2017 outstanding share you calculated. Have you seen your total shares for 2017? Have you seen it? You see 1740. That is the outstanding share as at 2017. So that becomes your outstanding shares in what? In 2018. So here, when you come to the beginning of accounting, first January 2018, your outstanding share is 1740, right? Okay. Then you go into the question. You realize that 2018, in 1st June 2018, they issued 60,000 shares. So 1st June. So you come here, new share, new issue. 1st June 2018, new issue is what? 60,000 or 600. 60,000. So here we'll give you what? 60. So we add it. 60 plus 1740. So that gives you what? 1,800. Okay. Is there new issue? Yeah, there was what? There was a right issue of 342. Okay. So when was that? That was on 1st September 2018. Okay. So right issue. 1st September 2018, right issue. And they gave you what? 3 for what? 3 for 2. So if you have 3 for 2, then it will be what? 3 over 2 multiplied by the outstanding, which is 1,800. Right? Okay. So that gives you how much? 2,700. And then you add it. How do you have 4,500? Is there new issue? Let's check. No, there is no issue after that. Okay, then let us do the apportionment. Okay, let us do the apportionment of what? of the month. So from year to year is how many months? That would be 5 months. 5 over 12. Because when you look at it, from 1st January to 1st September, sorry, 1st January to 1st June is what is 5 months. So from July to from June to September, June, July, August, September 1st. So that means it's 3 months. So up to August. That gives you what? 3 over what? Over 12. Another outstanding is here. From September to December is how many months? September, October, November, December, which is what? 4 months. So 4 over what? Over 12. When you are done, add and see if it will be up to 12 months. All right. Okay. So once we are done, we have issue to deal with here. We have what? Right issue. So once we have right, then we need to calculate our bonus what? Fraction. So we have to calculate our bonus factor. Okay, so here we go. What do we have? We have what? Our cum right price over theoretical x right price. Now, in the question, they've already told us that the right issue is how much? 3 for what? For 2. And then the price, they said that the market price is how much? The market price of the share, right issue share is how much? Is how much? We have 2.5 per share, and then the pre-market price issue is what? 4. Okay, so we have what? Market price is what? 4, and the right issue price is how much? Is what? 2.5. Now, once you know you have your cum right price and the SR type, and among them, we will know one value out of this. So we will know our cum right price is what? Is 4. That's the market price. Is 4. But the theoretical extra price, we don't know that one. So we have to go and look for it. All right, so how do you find it? So you have it here. You have your shares here, the share price, and then the total value here. So I told you that you can start with what? New share, and then you have your old share. So your new share, you pick them from what? You pick them from the right issue here. You pick them from right issue here. This right issue that you see here, the meaning of it is that when you are out of the two, you hold, they say 3 for 2. It means that when you hold 2 share in a company, will give you what? 3 share to buy. That's the meaning. 2 share you are holding will give you 3 share to buy. So they will say that 3 for 2. It means it will give you 3 new share to buy for every 2 shares that you hold. If so, then 3 is what? Is the new share that they are issuing. And then 2 is what? Is the old share. Now the price, the new share price is what? They said they will sell it out 250 pesos. And then 4 is the what? Is the old price that they were selling before the right issue. So you have a 3 times what? 2.5. So you multiply. How do you have here? We got 7.5, and here is what? 8. So when you add it, it will give you 15.5, and this one will give you what? 5. So when you're done, then you divide. So you have your x right price. Okay, so that gives you what? 15.5 over what? Over 5. What do we have? I get 3 points what? 1. All right, so now you know your S right price. So if you know your S right price, that will be what? 3.5, 3.1. So now we know our bonus fraction. So this our bonus fraction is what we will do. We will adjust it here. So when you come here, we will adjust it to the prior what? We will adjust it against the what? Outstanding prior to the what? Prior to the bonus or right issue. Okay, so you have what? 4 over what? 3.1. 4 over 3.1. So we will not adjust it because it has to be up to the outstanding before the right issue. So here, no adjustment. Okay, so and then what? We work it out. So we have what? 5 over 12 times 4 over 3.1 times 1740. So here is what? 935.5 times 3. So 1,800. This gives you what? 580. So 4/12 times 5,500. I give you 1,500. Okay. So when I'm done, then you add it up. Plus 935.5. Alright, so this is your what? Your wins. Now in the question they say what? They say profit is how much? Let's check the profit. The profit is what? 320. Profit is 320. So now we know our profit will be 320. Now we can calculate our basic earning per share, which is what? Profit, which is 320, over what? Our wins, which is 3, basic earning per share divided by so 0.16. This 0. We can approximate it to what? 0.11. So that is it about that. Now follow the question. The question, they said something here. They said that calculate the basic earning per share for 2018 and comparative for 2017 to be included in the what? In the 2018 financial statement. So comparative for 2017 to be included in the what? In the 2018 financial. Calculate the what? Basic earning per share for 2018 and comparative for 2017 to be. You see, all that they want you to do is that you have to do what we call comparative. So you know what? Comparative for 2017. So when you are working, the data is what you should do comparative to 2017 to what to be included in what's in the 2018 financial statement. What they mean here is this: pick basic earning per share for 2017, right? For 2017, then you multiply by the what? By the inverse of what? Right issue. That's the meaning. Because you see, you are coming to report for 2018 accounting year, because there's a right issue in 2018. When you compare the 2017 with 2018, you will see a huge difference, because 2017 doesn't have right issue. You understand? So if you want to do a comparative, it will not be, you see, comparison will not be fair, because one has right issue and the other doesn't have right issue. So it will affect the analysis that you want to do. You understand? So you need to find the inverse of that, so that you can put them on the same scale. Just like when I was talking about, so as I spoke about what we call restatement. So the restatement, you need to restate it so that it can be on the same position for comparison purposes. So once you have it here, so as so you pick the basic earning per share for 2017. So what's the basic earning per share? Basic earning per share for 2017 is how much? 0.15. So you pick 0.15. Then you multiply by the inverse of what? Inverse
The right issue.
right issue is how much? 4/3.1. So the inverse is what? 3.1/4. And so when you multiply, what do you have? 0.15 times 3.1 divided by 4. So that gives you 0.12. Now you can do the comparison. So when you pick 2018 and 2017, check their basic earning per share. You realize that 2018 is how much? 0.11, and 2017 after comparison to what? 0.12. You understand? So you realize that they are at the values that when an investor is looking at them, the person will not be too much alarmed, right? All right, because unlike before the comparative, the 2017 basic earning per share. So before, it was how much? It was 0.15. Before, it was 0.15. So when the investor picked this, comparing to 2018, the person will be alarmed. The person will be alarmed. So once you convert it here, you have seen that it's now coming to a level that the investor can make a considerate decision on the. So this is how we calculate this. Thank you very much.